Hello students, we are discussing the chapter 1 of accountancy, that is meaning and objectives of accounting. Some of the portion we have discussed in the previous video as well as in the online class. Some of the portion of this chapter has been left, and in this video we will complete this chapter. The content left is advantages and uses of accounting. So today in this video we will discuss this part, advantages and uses of accounting. So there are so many advantages of accounting, there are so many uses of accounting, which may be as number one, helpful in management of business, because managers takes the help of accounting, because manager takes all types of decision on the basis of accounting data. So accounting is helpful in management. Second one, accounting provides complete and systematic record. Business transactions have been grown in size and complexity, and it is not possible to remember each and every transaction. Accounting keeps all the records of the business in a systematic manner and provide the true picture of the business. So next point, that is third point, is information regarding the profit or loss. With the help of accounting, we are able to find out the exact profit or loss of the business, as we know that at the end of the year, with accounting records, we prepare profit and loss account and trading account. And from that profit and loss account, we are able to know about the exact profit or loss of the business. So accounting is helpful in ascertaining the profit or loss of the business. Fourth point, information regarding the financial position. The important thing is here, what is financial position? Financial position of the business means the position of assets and liabilities at the end of the year. The values of assets and liabilities at the end of the year. The assets and liabilities and the values are shown in the balance sheet, which is prepared at the end of every year through accounting records. So accounting is also helpful in showing the financial position of the business at the end of every year. Fifth point, enable comparative study. By keeping a systematic record, accounting helps the owners to compare 1 year's data, accounting data, with those of other years also. Such a comparison provides useful information on the basis of which important decisions can be taken more judiciously. Next point, that is helpful in assessment of tax liability. Properly maintained record will be the great help when the firm's tax is assessed or GST is assessed. Such records when audits are trusted by taxation authorities. Next point, evidence in legal matters. Properly maintained accounts can be put as an evidence in the court when it is needed. Next point, facilitates sales of the business. If a business entity is being sold, the accounting information can be utilized to determine the proper purchase price of the business. Helpful in raising loans. According to this accounting information, helps a lot while raising the loans from the bank or other financial institution, because sanction of loan screens various financial statements of the firms, such as financial accounts, fund flow statement, cash flow statement. On the basis of these statements, the loans are being granted by the financial institutions and banks to the business. Helpful in prevention and detection of errors and frauds. So accounting is also helpful in preventing and detecting the errors and frauds. Now it was about the advantages or uses of accounting. Now we will discuss about the limitations of accounting. limitations of accounting. Let us discuss some of the limitations of accounting. So the first is influenced by personal judgment. First point is influenced by personal judgment, because accounting is an art of recording, classifying and summarizing in a significant manner, and here the results of the business are interpreted, but interpreters are the analysts, and their analysis may vary from person to person. So accountant has to exercise his personal judgment in respect of the various items, which may vary from person to person. For example, it is extremely difficult to predict with any degree of accuracy the actual useful life of an asset which is needed for calculating the depreciation. The same is true about the method of valuation of stock and making provision for doubtful debts. So different persons are bound to have different opinions in respect of different things. So the first limitation is accounting is influenced by personal judgment. Now let us discuss the second point. Based on accounting concepts and conventions. Accounts are prepared on the basis of a number of accounting concepts and conventions, assumptions. Hence, the profitability and the financial position disclosed by the accounting may not be realistic. For example, fixed assets are shown in the balance sheet according to the historical cost concept. This means that the fixed assets are shown at their cost and not at their market value. So it doesn't give the exact position of the business. Third point is incomplete information. Accounting statements provide only the incomplete information because the actual profit or loss of the business can be known only when the business is closed down in actual sense. Otherwise, all are the estimates. Third point is omissions of qualitative information. As we know that in the accounting, only quantitative data are recorded, not the qualitative data. But quality plays a very important role in the success of any business. So it omits the qualitative aspect, which is not good. The fifth point is based on historical cost. Accounts are prepared on the basis of historical cost, that is the original cost, the purchase price, and as such, the figures given in the financial statement do not show the effect of changes in price level. The assets remain undervalued in many cases, particularly land and building. The outcome of this practice is that balance sheet values of assets are not helpful in estimating the true financial position of the business. Sixth point is affected by window dressing. Window dressing refers to the practice of manipulating the accounts so that the financial statements may disclose a more favorable position than the actual position. Many many businessmen use this practice of window dressing. Next point, last point is unsuitable for forecasting. Seventh limitation is unsuitable for forecasting. Unsuitable for forecasting. Financial accounts are only a record of past events. Continuous changes takes place in the demand of the product, policies adopted by the firm, the position of competition, etc. As such, the financial analysis based on past events may not be much use of forecasting. Now, the last concept in this chapter we are going to discuss, That is qualitative characteristics of accounting information. Qualitative characteristics of accounting information. Qualitative characteristics of accounting information. There are four qualitative characteristics of accounting information. That is reliability, relevance, understandability, and comparability. Okay, so let us discuss one by one all these. Number one is reliability. Means as per this feature, accounting information must be reliable. Means reliable means we can have faith on the whatever being disclosed by the accounts. उसमें पूरा विश्वास होना चाहिए हम लोगों को कि ये बिल्कुल सही ट्रांजेक्शन्स हैं. Accounting information must be reliable. Reliability includes that information must be factual and verifiable. The accounting information is said to have verifiability if such information can be verified from source of document such as cash memo, purchase price, sales invoice, correspondence agreement, property deed, and other similar documents. Verifiability ensures the truthfulness of the recorded transaction, which can be independently checked by anyone interested to ascertain the true position of the business. But if the source of document are not available, the accounting information disclosed by profit and loss and balance sheet will be capable of being verified will not be capable of being verified and would imply that it cannot be relied on. It means for reliable purpose every transaction must have its very must have some evidences to be verified. Second point is relevance. Relevance according to the accounting information shown by the financial statement must be relevant to the objectives of the enterprise. Unnecessary and irrelevant information should not be included in the financial statements. To be relevant, information must be capable of making difference in a decision. That is, it must help the management, investors, creditors, and other users of accounting information in making decisions. For example, the if we take an example, the information regarding the rate of dividend paid by company in the previous year is relevant information for the investors since it provides the basis for forecasting future dividends. Similarly, while reporting data in the balance sheet, it is the total amount of data which is relevant and not number of data. Third is third is understandability. Understandability. As per this feature, accounting records financial statements should be shown in such a way that these should be understandable for every interested party, whether investor, lender, owner, employees, manager, etc. Hmm? A person who does not have the knowledge of accounting terminology should also be able to understand the accounting data without much more difficulty. This can be done by giving a relevant explanation, notes to explain the information given in the financial statements. So last point now, Comparability. Comparability means accounts, yeah, accounting data or accounting financial statement should be presented in such a way that comparison can be possible. Comparison can be possible with this year's different items and previous year's item. Comparability is a very useful quality of accounting information. The financial statement should contain the figures of previous year along with the figures of current year so that the current year performance can be compared with the past performance. Similarly, the financial statement should be prepared in such a way that the profitability and financial position of the concern may be compared with other concerns of similar type. So comparison facility should be there in the accounting records. So these are the four features which are called the qualitative characteristics of accounting information. Now, now this chapter is over, and in the next video we will be there with the next chapter. Okay, till then, bye. Okay.